Welcome, everybody, to episode 4 of the T3 Alpha Show podcast. My name is Michael Camo, and I am honored to be joined by Scott Bauer, who is a legend in the options community. And yes, what you see behind him is actually the CBOE options floor. Now, Scott, that is not a green screen. That is the real thing, correct?
It is definitely not a green screen. It is not AI. Yes, this is real. And, many people don't know that there is still live trade. And here at the CBOE, not only is it live trade in S&P 500 options, just to my left here is the VIX, the volatility index options pit that trade live. The Russell is right over here, just kind of in front of me here a little bit. So yes, this is real. What you see going on behind me, that is live. It is not AI generated. It is definitely not a green screen.
Okay, now, funny. I was just watching Wall Street, seeing Bud Fox put in his order for 1,500 July 50 Anacott steel calls. Now, tell us what it was like actually being on the physical floor back in the 90s when you got started.
It was busy. It was active. I would say it was aggressive, meaning now the orders come in and it's kind of just all shared amongst all the traders and everything. Back then, we were fighting for our lives because really back in the 90s, most traders like myself, you either were known as a prop trader where you traded on your own for yourself, or you were part of a small group. Now all the traders down here are all affiliated with either a major trading group or a big bank. So the dynamic of that is a lot different. The other thing also, if you can imagine this, 25, 30 years ago, you can see everybody right now, again, this is live, you can see everybody right now has their handheld computers and their laptops, and they're doing everything on there, and they're trading electronically through there and getting all their option quotes and theoretical values through there. We didn't have any of that. We did it up here. We had maybe printed sheets, literally printed sheets of theoretical values or whatever. But boy, that, set the stage really for me learning and understanding not only how to trade the markets, but how volatility affected the markets, because I didn't have a machine telling me what to do. I didn't have a machine telling me what was going to happen next. It all had to be intuitive. And so, I really think that's what set me up for the success and the career that I have now. And I will tell you, Michael, I think you know this. I was the first and only market maker in the world to trade Amazon options when they first got listed back in the late 90s.
So okay, yeah, all right, okay, yeah. I want to jump right in here. Okay, so we're gonna get to Amazon in a second, but
okay,
it sounds like you had to learn the hard way. Like,
yes,
there were no computers doing the work for you. Now, do you think there's a big benefit to that, to actually having to do it manually?
I think there is a major benefit if you are a retail trader. Yes, you can just, point and click and get your position. But if you really want to understand the landscape of what's going on, if you really want to understand what your position is telling you, if you want to understand what your next move might be, whether that is a hedge, a roll, an exit, then yes. I mean, there is no question learning it, literally slugging it out in the pits is why I'm here today.
Okay, all right. Now I want to talk about Amazon specifically because if you weren't around in the 90s, it is so hard to explain how wild tech stocks were in those days. It was there were 1,000 different meme stocks every single day to trade. Now, when you were given Amazon, were you scared? Did you think, oh my God, like this is going to be a million times worse than GE or Caterpillar or something?
That's a great question. And that's what most traders were used to. We're trading the GEs, the Caterpillars. I traded Coca-Cola and Bank America options for a long, long time before Amazon ever came around. And you're talking about these old kind of stodgy stocks. Volatility didn't really swing much, and you kind of knew what to expect. So when some of these stocks started getting listed in the late 90s, and then Amazon, most of the traders on the floor, we're talking back at the time, there were probably upwards of 1,500 market makers, traders on the floor, either trading in the S&P, trading in individual equities like I was doing. I would say that 98% wanted nothing to do with these big, newer NASDAQ stocks that came out in the late 90s because the volatility. And people didn't, most traders, I would say, didn't really understand the dynamic of implied volatility. So literally, this is a story, and I talked about earlier, maybe that we would be busy, 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 then I'd be doing a crossword puzzle, but you're always waiting. I am literally laying on the floor in the Coca-Cola options pit in the summer when Amazon options were listed. It was dead. There was nothing going on, but I never wanted to leave the floor because you never knew when that next order was coming. There was an announcement over the loudspeaker from the market officials that Amazon was just listed and it was in a different trading pit and they needed traders to go over there. So I kind of blew that off, continued to do my crossword puzzle. Another 5 minutes goes by. There's another announcement. I'm like, all right, what the heck? I walk over there. Literally, I was the only market maker that went over there to trade it. And that lasted for about 3 months, where all of the option volume that traded in the world, and I say in the world because back in the late 90s, there was no multiple listing of exchanges. If a stock was listed at the CBOE, those options only traded there. They didn't trade in New York. They didn't trade in Philadelphia. They didn't trade in San Francisco, and likewise. So it was really just insane. It was really just insane. And so I just started trading. I learned on my own, and there we go. The rest is history.
Okay. Now we are going to get into how you started Prosper Trading, but how did you get to Goldman Sachs?
Yeah, so I actually started a trading firm back in the mid-ish 90s with my backer and with a couple other traders. We built that up. The name of the firm was Botta Capital Management, BOTTA. We had over 200 traders trading for us. And then in 0203, I went upstairs off the floor to trade upstairs and to really manage the entire firm. By '05, I was out of that. I was out of my prior firm. And I got a knock on the door, literally my office door in the CBOE, from Goldman Sachs saying, "Hey, we're looking for some traders to go in the S&P 500 options pit. Are you interested?" And that's how I got in with Goldman Sachs. And I traded in there for 4 or 5 years with them through the great financial crisis. So through '07, '08, '09, pretty wild, pretty wild.
Okay. Now, what is it like trading for a big bank? Are there like stricter limits on
Way
what you can
different.
do? Are there more opportunities for you? Like, what is it like
Yeah.
trading for a big firm like Goldman?
So when I was trading on my own and trading for my firm, I would be a pretty big size trader, but a big size trader at that point meant, maybe you'd do 50 lots, 100 lots. When we talk about lots, those are the amount of contracts. When I went to work for Goldman Sachs trading for them, it was basically limitless. There was no limit to what I could trade. And the reason being is, as soon as I would make a trade, it would go into their big pool, it would go into their blender, and they would immediately go hedge it elsewhere in the world. Maybe it wasn't even with other equity options or in the S&Ps. It could have been with a foreign currency. It could have been with commodities. So they knew from their algos, from their algorithms, where the best hedge was at that time. So honestly, I really had no limit to the size I could trade, which was why, and I don't know if everybody can see this right now, but kind of over my right shoulder in the back there's a couple brokers in a green jacket. They were the same brokers that I stood next to in the S&P 500 options pit. Those are brokers from a company called Israel Englander. They typically had the biggest orders in the crowd. So I stood literally right next to them because they knew that I could take down some pretty big size. So back there, I'm kind of, I can see myself, I'm kind of pointing over there. You'll see a broker or two. And they've been around the CBOE for the longest time. And the CBOE always, for my lifetime, and I'm 35 years here, has been on the forefront of innovation, the forefront of bringing new products to the marketplace. Back then when I was trading, we didn't have zero DTEs like we have now, which are now 60+% of all the options that trade out here. But CBOE has always been on the forefront of bringing new products, and even when the whole big shift went from floor trading, pit trading, open outcry to the electronic world. Sure, it was an adjustment for the exchanges as well. But I think if you look now and you look back in hindsight, CBOE has done it right, and they are absolutely, a global leader in this.
Okay. Do you ever think we will get to a point where it's 100% electronic?
No, no, I've always said that it won't be. And here's the reason why. So just imagine what happened a few months ago on Liberation Day, okay, or any other big market moving day, right? The actual traders, the market makers down here, we are obligated, literally by law, we are obligated to uphold the markets that are transmitted out, that are posted out to the universe. So if someone comes in with an order and says, what's your market on the, I'm just looking at where S&Ps are now. What's your market on the October 6,800 calls? Whatever is posted up there, whatever that market was, I am legally obligated to fill either on my bid or my offer, depending as a buy or sell, up to 10 contracts. Now, if you multiply those 10 contracts by the 100 traders or so, 150 traders that are down here, that's a lot of contracts. Now, if there was no open outcry like that, if there was no floor, if I'm a retail trader or, even a broker and I'm just trading on the screens, what can I do when maybe volatility gets out of control and I don't want to take any risk? Boom, I click my computer off. The market doesn't want that. The market wants to know that things will run as they're supposed to, will run efficiently. And that is one of the main reasons I have always said, as much as that is consolidated, open outcry is never going to go away. Another thing here, especially for the S&P 500 options, this is an unbelievable place for banks, for big institutions to get price discovery. What do I mean by that? They come in, someone comes in with a big order. Again, let's say I'm going to make this up, the October 6,800 calls. Maybe the market is, $40 bid at $42 offer. Okay. Well, if you're a big institution, you're a big bank, you're not going to sell that bid. You're not going to buy that offer. You're going to negotiate. That is what price discovery is all about, to make sure that customers get filled at the absolute best price. And that's what happens here.
Okay. So wait, when you went electronic yourself, like, did your skill set translate automatically?
Am I allowed to say that it sucked? Am I allowed to say that?
You better. If it's the truth, you better say it.
It sucked. And 90% of the traders that I knew of that were here trading on the floor when the market really shifted to the electronic market, they're no longer in the business. It was difficult. It took out so much of the advantage that we had as being a market maker. All of a sudden, I went from being a market maker where I could buy many things on my bid, sell things on my offer. Maybe there was, some negotiation. Now all of a sudden I became a market taker, right? There's nobody to negotiate with. So now all of a sudden I've got to buy offers or I've got to sell bids. Not only that, but I didn't really have the knowledge or the foresight anymore to know resting orders that were out there. So maybe when I was trading Amazon, I knew that a broker had an order out there, to sell maybe 1,000 puts at some price. Well, if I knew that that was out there and I could do what we called lean on that order, right? Just knowing that was there, then I could make some certain trades knowing that that was out there. That completely went away when the electronic marketplace took over. So it was a massive, massive adjustment. And again, 90% of my friends, traders that I know of that traded on the floor were out of the business within probably a year to 18 months of really things going over to the electronic trading world.
Okay, was it also just less fun and exhilarating
Oh, there's no
because
question about that. There's no question about this. There's something to be said for the camaraderie. There's something to be said for being in this active community where you've got your juices flowing all day long, right? And it didn't necessarily make us trade more, but it made us just be on the ready. It made us be more aggressive. And even when things were not busy, there was always something to do. And listen, nobody liked every person down there. There are a lot of people that didn't like me. There are a lot of people I didn't like, right? But the respect that you had for the other traders down here doing the same thing that we had was incredible. And the integrity had to be there. If there was a market maker, if there was a trader that wouldn't live up to his markets, wouldn't live up to his trades, that person was kind of axed out. So we had to be of the utmost integrity to remain down here. But yeah, I mean, when this thing went electronic, yeah, we lost all that. Thank goodness that at least at CBOE here we still have this, because this is what you see here live right now. This is what it used to be like. Now it's a lot more casual now. You're going to see even myself. Everybody pretty much is just in a shirt, jeans. Back in the day, couldn't wear jeans. You had to wear khakis or dress pants. You couldn't wear even a polo shirt or a golf shirt like this. You had to be in a collared dress shirt. We had to wear a tie. We had to have a trading jacket, which some of the people still do. And it was pretty strict. No food, no drinks on the floor. Now, everybody's eating their lunch, drinking their Starbucks. So really a different environment, and one that to a person, I don't know anybody that was down here, in that time frame that doesn't wish they were still down there.
yeah, it's funny, I actually imagine people eating like cheeseburgers and French fries on the trading floor in between, arguing with people and doing the hand signals. Okay, but I do want to talk about this topic of integrity, which I find really, really interesting because, so to my understanding, everything is sort of revolving around like hand signals and coded language.
Yeah, the broker right next to me right now is literally making a trade with a market maker that's probably 25 feet away from him, but there's so much loud. They're just signing. They're
Yeah,
just signing the signals. Yep.
yeah. Like I find it really interesting. So was there sort of social enforcement of this? Like if you screwed somebody over,
Yes. Yes.
would you
So
basically be just banished?
well, so there were what was called out trades that would happen all the time. An out trade meaning I make a trade with Johnny over there, and maybe he thought he sold me 20 and I thought I only bought 15. Or maybe he thought he sold me calls and I thought they were puts. That would happen all the time. However, they would get resolved 99.5% of the time, because you had to make that resolution. You had to make things right. Maybe each person had to make an accommodation. And if you didn't, if you got the reputation of having these out trades and just saying, screw you, right, to the other person, you were ostracized and you were kind of left in the dust.
Very, very interesting. Okay, now we are going to get into like how and why you started Prosper Trading. But so we recently surveyed people on what was troubling them with options trading. And so I want to kind of go through some of the things people struggle with. So the first thing is just learning the basics. I think a lot of people just go with buy calls if you like them,
Yep.
but
For sure.
buy puts if you don't. Do you think people are really setting themselves back by just not learning the basics of things like implied volatility, the Greeks?
So if we look at the way the landscape has changed, everybody from our kids to even us, everybody wants that instant gratification, right? Many people don't want to take the time that it takes to learn a new trade, to learn a new art. So, especially with the way that every brokerage platform works now with point and click and it tells you theoretical values, kind of easy for everybody to trade. But that's why 90+% of retail traders fail, because they don't understand the mechanics behind what you were just saying, behind implied volatility, behind the Greeks. They don't understand why they own a call and the stock goes up and they lost money, or they own a put and the stock went down and they lost money. So there is an art to it. And what I tell people, what I educate people, and I know this is kind of leading into why I started Prosper, but what I tell people is, especially if you're new to this is like learning a foreign language. You are not going to learn Japanese, French, Spanish, whatever it is, overnight. You're not going to learn it in a week. Okay. So there are stepping stones, but many people don't have either the tolerance, the patience, or the time to want to put the effort into doing that. And I think really those are the people that are not successful.
Okay. I want to talk about people's trading goals. So one bizarre thing I noticed one time we surveyed our audience and we said, "What is your trading goal?" And across the board, the most popular answer was $10,000 a month. Like, and this wasn't multiple choice. People had to manually type in
Okay.
their own answer. And across the board, people were saying, "I want to make $10,000 a month," which I interpret as I want to give my boss the middle finger and have
sure.
enough of and have enough of a living trading. So, do you think it is realistic for people to have dollar-based goals or even batting average goals in trading?
I think that those goals are probably not very realistic for most people, especially the batting average goals. And the batting average, I think you're assuming, is success of
Yeah.
trades. I put on 10 trades, I won 7 of them, I lost 3 of them. That is that percentage of success is something that people look at and don't truly understand. Because I could, over the long run, this is not the case, I could, over the long run, be 80% loser, 20% winner on my trades and be massively successful, right? Because if I am just taking minuscule losses and letting the winners run, great. I want to do that all the time. That's not how I trade, but that certainly is a case. But when people have those goals, you need to be realistic. Okay. I can tell you that the students here at Prosper and the way that we teach, the way we educate, the way that we set them up with what they can expect is, depending on the money in your account, okay, you can, this is no guarantee. I'm not putting guarantees out there, but the expectation is you should make somewhere around 50% on your money for the year. Okay. So if you want to make 10 grand a month in my world, okay, that's $120,000 for the year. That means you've got to have an account that's a couple of $100,000. You're not going to make 10 grand a month starting with $1,000, starting with $5,000. Maybe there are some people that do that. I would say that that's the 1%. So you have to have realistic goals. It definitely takes money to make money, but that's okay if you are just starting out. It's okay if you are just learning. It's okay if you have an account that's $2,000, $5,000 to start, because from a percentage standpoint, you're going to be really, really happy. Maybe from an absolute dollar standpoint, it's not going to get you where you want. From a percentage standpoint, though, it will. So, to have those hard, I wish I could do something with this cord here from my headphone. You have to have realistic goals. And that's why you need to have professionals. You need to have seasoned traders, seasoned educators there, a mentor to guide you so they can set you up for success, set you up for realistic opportunity, and not just, oh man, I've got $2,000 in my account and I only made, $200 this month. This isn't working. Well, if you made 10% in a month, it's working. It's working.
Okay, but a lot of people do have this lottery ticket mentality,
They sure do.
and the dream is they want to buy those zero the ODTE
Yep.
options and turn 1,000 into 10,000 today. Now, do you think that mentality guarantees failure?
I would say the probabilities of that are failure. Like I said, if that is how you're trading, if that's the mentality that you're out there to hit a home run, you're not going to be doing this for a very long time. Absolutely. My theory, the way that I have always traded, even though when I was trading for Goldman Sachs and when I was trading for myself on the floor, I was literally one of the largest traders, not largest in stature, I'm 5'8", but largest in terms of trading option contracts. That didn't mean that I was taking undue risk because I was always keeping my risk in check. I was always hedging. So I traded from day one until now. I trade with the mindset that I want to go up to the plate and I want to hit a single. Okay. And with that mindset, sometimes I'm going to hit a double. Sometimes I may hit a home run. But what it does is it also limits my strikeouts. Okay. So again, in this world, everybody wants that instant gratification. There are very few people that I know that come into this world with the mindset of grinding things out. That is how you are successful. That is how you stay in this game. That is how you build up your portfolio. That is how you get to the point that, yeah, I can quit my other job. Those that I know that take those shots, not they don't live long in this game.
Okay, now in terms of grinding it out, now there is one basic concept people keep telling us they have trouble with, and it's entry prices.
Sure.
Because I think a lot of people they might see, let's say the bid is $1, the ask is $1.10, and they have no. And I will throw myself into that category when it was like, okay, I guess I'm paying $1.10 for these calls.
Correct.
So like, what can people do to, I guess, improve the prices on their entries?
So I think it's very understated fact that 70% of all options that trade somewhere in the middle of the market. They don't trade on the bid, they don't trade on the offer. If you're a retail trader like we all are, and you go in, like you just said, the market's $1 bid at 110, depending on the situation, if I'm a buyer, I'm probably going in 105 bid. Okay. Now, what does that mean depending on the situation? It means how badly do I need to buy that option, right? Is it protection for something else? Is it something that I just really need to have? But if you think about it, even on a market like that, that's only 10 cents wide, which is a very narrow market. If you are giving up a nickel, if you are giving up a nickel on that, just think about trading that repeatedly, 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 how much you're giving up when in reality, you probably have somewhat of a 70% opportunity of trading that option in the middle of the market. So my suggestion to anyone and everyone, okay, is if you're just starting out, test the waters. It is still an auction market. Even though everything is not open outcry like it is here, even trading on the screens electronically, it is like going on eBay, where there could be offers out there, you make a bid. There's bids out there, you make an offer. Okay. Sometimes you're not going to get your trade. You will learn that though along the way. So just think of all those pennies, those nickels. Sometimes even, if we're talking about a stock that is $200, $500, $800 stock, and the markets are maybe $2 or $3 wide, think about all that significant difference you can pick up by not selling a bid, not buying an offer.
Okay, now another big thing people struggle with is overwhelmed by the number of strategies they can choose from. For
Sure.
example, if you're bullish on Tesla, you can buy calls, sell puts, do butterflies, iron condors. We could go on and on. Do you think it's better, at least for people that are starting out, do you think it's better for them to keep things simple?
Less is more, even for advanced traders, even for people that have been in the business, for a long time. Less is more. The more you try and complicate something, the worse off it's going to be. Now, I say that, and it's very easy to say, okay, if you're bullish, just buy calls or a call spread, or, if you're bearish, buy puts or a put spread. I say that, but if you're a beginner, that is what you really need to follow. You will, and this is what we teach our traders, this is what we teach our students. You will learn these other strategies along the way. You will learn what strategy is best if you're bullish and, let's say, volatility is really high. Okay, you will learn how to do that. You will learn what the best strategy is if you're bearish and volatility is really low. But when you are starting, like you said, it can be very, very overwhelming. Keep it simple. Keep it simple.
Uh,
Absolutely. Do not get overwhelmed.
okay, now I'm curious to know because I want to get into how this ties into your trading style. But like, how would you describe your own personality? Like, are you naturally a risk taker? I mean,
No,
you're
zero.
entrepreneurial.
Nope.
Okay, so
I'm
so
I'm
so
not a risk taker.
okay, so is your trading style like safety first?
My trading style is to be aggressive, but always be risk defined. So I am never going to put a position on where I know that, God forbid, even if it is the slightest chance, 1% chance that it could happen, that is going to wipe me out, take me out of being able to trade. Everything I do is completely risk defined. Everything I do, like I mentioned earlier, I'm not out there looking to hit a home run. Some people are going to say, well, you're not trading right. And that's fine. That's fine. But I've also been doing this for 35 years with that same mentality and have done pretty well. So my mentality is to just have the highest batting average on my team, to grind things out. And that doesn't mean I only use one certain strategy. Obviously, because I've been doing this for so long, you know, I use just about any available strategy that is out there that fits the dynamic of the marketplace. And the market is always changing. What may be the right strategy today was different from what the right strategy was yesterday.
Okay, now is that in your trading? Have you always been like this, or did you have to learn the hard way? And I ask because I speak to a lot of successful
I
traders.
learned the hard way.
Yeah. Oh, okay. So what is your learning the hard way story?
Yeah, I learned the hard way. So in my first 2 months of going on what's called a badge, my membership. So when I first hit the floor back in 91, I was a clerk for another trader, for my mentor, who to this day is still one of my best friends in the world. And, when we were both comfortable about, okay, now you go trade with real money. Now you go trade, I thought I knew better than the market. I thought that, all right, I'm going to buy this 100 lot of calls, and rather than selling my stock or making that hedge, I'm going to try and let it ride a little bit. And I got tagged one day. It was within my first 2 months of trading. I got tagged one day and I lost 20 grand. Okay, I lost 20 grand in a day, literally in my first year of trading. I was 26 years old, newly married. I had just bought a house, and here I am. I'm thinking that I'm out of a job and this career of mine is over before it really started.
Okay, now,
And
all right, all right. I have to interrupt you because I think this is a good chance to give some advice to new traders. So, how do you go home and break the news?
well, I didn't have to go home because my mentor, my backer, was standing about 100 feet from me in a different trading pit. And I went over there with my tail, but, between my legs. And I said, Mike, you're not going to be happy. I effed up. He's like, what'd you do? And I said, I really effed up. What'd you do? And I explained the situation. And he said, I knew you were going to make that mistake one day. I knew you were going to do that, but you're better than that. Fortunately, my mentor was someone that believed in me, was someone that knew the kind of person I am, that I'm not a risk taker. He knew that was me, and I just majorly made a mistake, and he gave me another chance. I've never, ever, ever made that mistake. I have adhered to every single trade I make. Every single trade I make, literally, another baseball reference, I am just looking to get on base. And so
Okay,
I learned it the hard way, but I never did it again. I never did it again.
Okay, interesting, because I've found in my experience speaking to traders and investors that they are always just a little bit hypocritical, where they will have some ironclad rule, but they will find an
They want to find
excuse.
a way to break it.
They will break it every so often. So are you completely rigid in that manner?
I am with my students. Okay. The reason I have that caveat out there with my students is because they are not as experienced as I am, right? So when I'm teaching, when I'm putting on a position with them, there are rigid rules that they need to follow. Now, because I can trade things a bit differently, or I can potentially manage something differently, I will let things typically go a little bit further, but I still have for my own self that rigid set of rules. With my students, it is definitely tighter. It is definitely narrower. But so at some point, many of those students get to the point where they can loosen up a little bit. But if you ever let those rigid rules completely go away, you're not going to show up tomorrow to trade.
Okay, now among your students you've had, the ones that have done the best, what do they have in common?
They follow the rules. They don't get caught up with FOMO. So many times when the market is active, or people are watching CNBC, Fox Business, and they see ads or they see trades going on, that, oh man, I got to jump into that, like what's going on kind of right now with some of these stocks like NNE and Oklo, and we see that happen all the time with different sectors, and you're like, oh my god, I got to get in this is the best thing. That is a recipe for disaster. That is FOMO, right? So what people need to understand is there's always going to be another trade to make. I promise you, whether it's in 5 minutes, an hour, later in the day, tomorrow, there's always going to be another trade to make. There's always going to be another opportunity that meets the reward to risk criteria that we have established. Those are our students that do the best, the students that are engaged, always asking questions. There's no dumb question that anybody could ever ask when it comes to the market, when it comes to options, hedging, whatever it is. So those that are engaged absolutely do better. Those that are really, really confident in the system and confident in the rules and understand that losses happen, because losses absolutely happen. For most people, they happen more than 50% of the time. Fortunately, my track record doing this at Prosper over the last 13 years is my win-loss is about 63-37. Okay, but losses absolutely happen. Nobody likes to take losses, right? We all feel like, oh man, maybe I'm going to let this roll. I'm going to let it ride another day and see if it comes my way. No, no, you've got to accept that is part of the game, and you move on.
Okay, now in terms of accepting it as part of the game, do you think there are backgrounds that set people well up for trading? I mean, things like like sports, chess, even playing video games, and basically anything that kind of teaches you risk and reward. Did you find that people into those things excel at trading?
They do, because they already have that mindset where they can accept failure, right? If you can't accept failure, and I'm not talking failure of blowing out your account, I'm talking about failure of buying something at $1 that you then have to turn around and sell at 90 cents to get out. That's the failure I'm talking about. Those types of people you just mentioned, they have a better intuition, they have a better mindset for, this is the right thing to do, and I'm going to move on. And it's different now trading on the screens than what it was trading on the floor. If you had asked me who the right person was to get into the pit here and trade 20, 30 years ago, you didn't need to have an engineering or a math background. You didn't need to be a gamer. You just needed to be quick on your feet and be aggressive. Now, you still couldn't be out there with the mindset of trying to hit a home run. You still always, always, first and foremost, have to manage your risk. Those are the people that are still in the game that are successful.
Okay, now we're going to close out in a few minutes, but tell me why you started Prosper Trading.
So I got to the point in my career that I really wanted to spend more time with my kids. I had done really, really well. I had always liked teaching. So if I was not a trader, I would be in education. In fact, to this day, I still teach a class at the local high school. I teach a class at the University of Illinois in the business school, my alma mater. So I've always liked teaching. So when I left the floor, but still continued to trade, I knew that not only could I help people, and I don't want to make this sound like a sob story or anything, but I enjoyed it. I wouldn't do this if I truly didn't love teaching and helping other people. So for me, I get to wake up in the morning and I get to do, from a professional side, two of the best things, two of the most important things to me that I like the most: trade and teach. Most people, can't say that they get to do that on a daily basis. I do. And the fact that we've been doing this now for the better part of 13 years with, tens and tens of thousands of students, I think that says something.
Okay. And guys, if you want to learn more about Prosper Trading, you can click the link down in the description below. You can also go to prospertrading.com. So, Scott, are you from Chicago originally?
Born and raised, absolutely. Born and raised. I've never left. I do spend some time out in Colorado. We love it out there, but I have been here my entire life. Diehard Cubs fan. Um, Pretty difficult to watch the Bears these days, but yeah, I've never left.
Okay, then we should get a little controversial. But how do you feel that Chicago pizza stacks up against New York pizza, even actual Italian pizza?
Um, I'm not going to say it's the best. I think that the amount of choices you have here for, you know, 5-star pizza are probably more so than anywhere else in the world. I love it, whether you want thin crust, thick crust, stuffed, whatever it is. My favorite personally here, if you're from Chicago or know Chicago, is actually Giordano's. I like it better than Lou Malnati's. Sorry, Lou Malnati's. I know most people like that. But there's always a fantastic option for pizza here.
Yeah, I was just curious. So I've been a lifelong New Yorker, and I love Chicago pizza. I think it's, even though it makes me want to die because it's so big, but oh my
Right?
God, it's good. Okay, one final question since I brought
Yes.
up Wall Street before. What is your favorite trading related movie?
Trading Places by far. And here's why, is because even to this day, I will reference back to it because people that don't understand that this goes on, that there is still live trade. When I say to them, okay, just imagine you've seen Trading Places, go back to, one of the scenes, one of the final scenes when they're on the trading floor. That's what happens here to this day. That's what happens here. Now, obviously, that was glamorized, and we don't have Dan Aykroyd and Eddie Murphy doing their thing, but it's exactly the same. So I love that movie for that reason, because it still holds true to what happens today.
Yeah, and guys, if you hope to one day be able to afford the GI Joe with the Kung Fu grip, click on the link down below to learn more about Scott Bauer. So, Scott, thank you very much for doing this. Hope we can do it again.
Thanks, Mike. Really appreciate your time.